not to put it too strongly. Peter Supino joins us now from Wolfe Research. Peter, it's great to see you. Let's start with the issues that you see facing Paramount.
Well, Paramount has a rich library, but they're competing in a game defined by scale from a subscale position. Paramount has fewer streaming subscribers. It has a lower revenue per streaming subscriber. And the productivity of the film and TV studio over the last 10 to 20 years has been lower than others in Hollywood. And so while the library is deep from a historical perspective, it hasn't been as productive in recent years. And so for lots of reasons, we think Paramount is actually highly motivated to get this Warner deal done to address some of those scale deficits.
That's exactly what I was going to say, is you're making the case for why they need this so badly. Is it a case of even if they win, you think they're challenged? Or if they win, would you then say, OK, perhaps they can, do something more exciting in the future?
So we think winning, it would be a good outcome for Paramount because we don't love Paramount's standalone prospects. Winning creates more optionality, more upside potential for the Paramount shareholder, but also more risk. I mean, winning means more debt. It means a lot more execution risk. It would challenge the management team to do a lot of things that nobody has ever done before. And so the degree of risk and opportunity on the merger scenario are much greater.
Right. I mean, they're only one of two underperforms you really have for the whole space, including Nintendo. You see the video game market not so exciting. Before I move on to some of the other areas, I think it's fascinating that live and music you feel will do quite well. But just to finish the point about the media business, what then happens with this space as there's Warner Brothers is going to end up with one or the other of these companies, and then what?
So we think that the streaming business, which is really just the downstream distribution of film and television and short form video, ultimately is going to remain a fragmented business. There has been a Netflix bull case around for years that ultimately streaming is a winner take all business because Netflix is, in this case, the best place to monetize content. And our view is that the owners of sports intellectual property, film and television IP have a say. And it's in their interest to keep the distribution landscape fragmented. And for that reason, the NFL renegotiation in 2026 will be a really interesting update. Anyway, however this merger turns out, we think there are going to be multiple streaming services for many years to come.
Right. And you're not necessarily all that jazzed. I mean, you basically have a market perform on the whole business, except for Disney. You like it for the experiences. And that brings us into the areas that you think are going to do well here. And it's kind of encouraging, right? Like to hear someone say, it's streaming, video games, but where it's at is live entertainment and music and all of these areas. What are the stocks that you like best? Obviously, Live Nation is a top idea. I noticed Charlie Babrinsko is a big fan of MSG. You have their stocks to market perform. And then in music, what do you think could do well there from an investment point of view?
Well, we think that streaming and social media make the world's best intellectual property of all kinds worth even more and then hollow out the middle. And so when it comes to sports and music, superstar athletes, superstar musicians, they reach more consumers more quickly, more virally, and more frequently in the world in which we exist today. And for those reasons, we think that the value of music, the value of concerts, the value of sporting event tickets, it's all going up. And so one of our favorite ways to monetize that thesis is Live Nation, which is a toll booth on artists' appetite to visit new cities around the world and extend their tours longer and charge more for the seats that they sell. And in parallel, we really like Spotify, which you also show on the screen. And that's a different thesis. We think the value of music itself is going up because streaming is such a better experience and music is so shareable today. And so Spotify is the best way to stream music on earth and ought to grow for a very long time.